Good morning, traders. Welcome to today's market review. Today is Monday, May 5th, 2014. This is Fred Razak at CMTrading. We'll start with the economic news today. Not much going on. Really just the beginning of the week is going to be a little bit light, and then we're going to get a little bit busier as Wednesday, Thursday come. But for today, we have just a number coming out at 12 o'clock South African time. That's 12 p.m. The Eurozone PPI number, it's an inflation number. The forecast is minus 1.8%. We'll see what comes out. Generally, it is a inflationary number, so it may have an effect on the euro. We've seen that the euro has been a little bit sideways trading the past, the past few months. Just going off of the back of Friday, just if we can discuss the non-farm payroll. It was a significant number. The market did react. We took this initial hit down, as we see here, and then we had somewhat of a support. Okay, and then we rallied right back. This type of move is typically called a fade. It's an overreaction to the first anticipation of the number, and then the number retraces right back to where it was before. So typically this is actually a very classic situation in terms of technically speaking from a trader standpoint. It's just that first reaction to the actual news and then the retracement right back. So right now we just are finding ourselves just literally below 3,900, 1.39, which is the top of the range. If we look at the daily chart, we'll see that we're really making these higher lows. Okay, we broke this at the upper side a couple of months ago in March, actually, and then we retraced back to these levels, and we're finding ourselves in a higher low, higher low, lower high. This usually is a wedge formation, usually either a breakout or a retracement on the downside. But this looks like it's going wants to break out on the upside, as it's making higher lows, okay, with more momentum. So every time they take it down, they take it right back up. So let's see if we can continue this strength on the upside, and just even a little bit breaking this 139 level, which is a major level, and then seeing if we could take out our previous high. This is a major level for the Euro USD. It has been getting a little bit tighter over the past year and a half, since it hit 121 about 2 summers ago. But on the upper side, it is still very choppy trading. But also there is a lot of opportunities for intraday traders to jump in, especially when we hit such volatility and you see such resilience from the actual pair. Moving along into the GBP USD, has been trading, like we said, on this big uptrend on a weekly chart, retracing a little bit. It's hitting these upper levels and doesn't want to break up on the higher level. Remember, we had spoken that it's it had really retraced from the 200 zone, so this thing still has a lot of room on the upside to continue its volley. Just looking for a shorter time frame. Every time we hit the upper range, if we look at a 4-hour chart, around these areas, you see it retraces. So taking a nice short, with previous resistance areas, this would have been a really great day trade to hold it a couple of days. You saw that it didn't really go above you, didn't break above 173.20 really, or it did for just a short period of time, and then it completely fell apart. So maybe look to to jump into it on the long side once it hits the lower trading range at around 171.40, okay, which is another 60 pips on the downside. It could retrace even here, okay, where we are right now, because this is previous resistance, and now maybe anticipated support. So picking it up at like 172-ish, okay, give or take 10 pips, might be a good place to pick it up to see if it's going to really retrace the top. I don't like shorting things as they're tearing on the upside, but you can't just stop to look at this thing and say, hey, how come this thing doesn't keep on going up? So on the upside, this thing is still very strong, so I would really recommend, if you are going to short the top of the range, to really take a tight stop loss. Don't take chances, because it could really continue its momentum on the upside and really take it up higher. Moving to the GBP USD, also challenging its upper range, as we can see here, not really retracing, and this is a bigger bar up, so it may continue this momentum into this week. We'll see how it unfolds, but this is another thing you should have on file, because it is trading within a great range. It has some volatility. Every time it goes down, it comes right back up. So like I said, keep this on the radar. Okay, nothing really short-term in it, but definitely something to look into. If you guys remember, we had discussed the gold, and last week, coming off of Friday's non-farm payroll number, we saw a beautiful move on the upside from 1280 up to now what's 1307. I think we could challenge 1330 again. I think I'm still bullish on the gold. I think we can continue this this upward momentum, considering that the Dow Jones didn't break higher. So my target price right now is 1330. I would say at about this area, this resistance, okay, previous support, and if we break it up higher, I would say we could get even to the 1350 zone. Clearly at 1280, we've set ourselves a nice base point. So future trading, this is really a point to really keep in mind, because we've really tested it a few times, third time, and we've bounced right off of it. Right now we are at somewhat resistance in the gold at 1306, but again, if it breaks up above 1310, I think we could go up to 1330, not a question. But keep it on your radar. Definitely look for entry points as it retraces. There is a lot of money to be made in the gold, and it looks like it's back in it. Just to discuss the Dow, it really failed us a third time. It's quite interesting to note, if we just looked at the gold and we saw a triple bottom, we're actually looking at a triple top right here. So it's an interesting inverse relationship between the Dow and the gold. So if we can't maintain this momentum on the upside to break above 16, I would say 1650, 16700, we could see it coming back into the 1610 range until we do find this point where we break on the upside. So again, I'm not one to look to short the top of the moves, but one can't deny this opportunity right here, because it is failing every time it's trying to challenge it on the upside. But again, if you are going to go short, make sure to use stop loss. Very highly recommended. Okay, so 1660 is a good entry point. Maybe to look to buy the retracement as it's trading within this range. Definitely around 1600 if it does go that far. Okay, this is Fred Razak at CM Trading. I want to wish you guys a good trading week. Thank you.